Hey guys, and welcome back to the channel. Today we are talking about trade setups for the week ahead, and I'm going to start by showing you a trade that I'm already in. Here's dollar Swiss. I did manage to get back into dollar Swiss and caught a nice little runner here. This is a trade that has basically, towards the end of last week, we had more dollar strength, which we'll talk about in just a moment. But we were able to actually break through this little pivot high that was kind of holding us back. We broke through that and we retested several times. After that explosion off of this level, I have currently moved my stop loss up just behind there with the anticipation of potentially actually trailing stops further going this week if the dollar Swiss continues its march higher. The reason I like to show you this is because I know that on YouTube, there's a lot of people who talk in theory, and shout out to Raja Banks. He had a tweet that I really loved. It was hilarious to me. He said he called it Trading View Warriors, people who never actually show you any real trades or live accounts or anything like that. And I thought that was hilarious. So anyways, this is a trade that I'm in. I know it's not the most glamorous size in the world or anything like that. It's not like I'm making 50 grand a day or anything like that. But it's a real trade, and this is one that I'm currently watching myself, so there's some skin in the game for you. So dollar Swiss, I'm looking for this thing to continue higher, and that brings me to the dollar in general for a moment. I want to talk about kind of what we saw last week with the dollar. So the dollar came down to a key level of support, right? So if we actually see, it's got this nice upward trend line. You've also got this fib level, right? So you get the 61.8, which just barely came underneath it before finding some support and rallied off of that last week. We had a very strong close for the dollar, relatively speaking. So backing up to the daily chart, you can see the dollar just looks very healthy overall. Moving averages are all lined up. You got this nice upward trend, and momentum favors the bulls. Now, why is this? Well, a quick fundamental recap on why the dollar is so strong right now. It's basically because the Federal Reserve has all the tools they need and all the green lights they need to raise interest rates, and they're expecting to raise by over 1% going into next year. Now, raising higher means, well, it means not great stuff for other currencies, as people, of course, the dollar raising its interest rate, or the U.S. raising its interest rate, will make the dollar more attractive, which could put other currencies under pressure, as well as the commodities market and as well the equities market. That's kind of what we've seen this year. We've seen all the other markets get tanked, while the dollar has just gotten this monumental run. I mean, just a quick look at the S&P 500 shows exactly what I'm talking about. You can see the S&P 500 is down at the point of making this about 25% year to date, which is an incredible sell-off overall. So let's take a look. If we're looking at the dollar, what's the way to play it? Well, in my personal opinion, the way to play it is to continue to do what we've done for the last basically year. We've been dollar bullish. And if you've watched the channel, you know this because we've talked about this over and over. Until something changes with the Federal Reserve, we remain looking to buy USD pairs against other currencies. And until that narrative and that momentum shifts, that is exactly what we'll be doing. So you saw I've got dollar against the Swiss franc long. Euro dollar, I did not get this correct. I'll show you guys a loss just because I don't want you to only see winning trades from me. So I went short here, and my entry just got absolutely bullied by the market. So I entered here, really technically sound entry in my opinion. I'm not really regretting this, but of course, sometimes the market just does one of these weird moves where it pokes up looking strong, right? It looked like we had broken this level clean, and then nope, rolled back over. So of course, a little pain there, but it's okay because I caught the dollar move anyways on dollar Swiss. Regardless though, looking at euro dollar for the week ahead, if this thing gives me any sort of retest of this area, I probably would be interested in trying again to short and looking for the continuation play. Now, of course, this is the daily chart, so let's narrow it down a little bit. Let's bring it down to the hourly chart and see if we can find anything. So maybe you don't want to wait until price comes all the way back up. There might actually be a setup before then. So if we look at the hourly chart, you can actually see momentum has started shifting to the downside there as well on the lower time frames. Pretty much like I said, as the dollar took over last week towards the end. So if I'm looking at this, I'm basically thinking, okay, well, resistance points here, right? So we could be narrowing in here and saying, okay, well, let's basically look for some opportunities to possibly get short. Well, what about that 38.2? So this is what I'll do when I construct a trade, right? The idea is just an idea, right? So what I will often do is I'll take a stab at selling something. So for example, let's say that I want action on the euro dollar, and I'd put my stop, let's say just above consolidation here, right? If I'm being a little bit more conservative, perhaps I want to put it above here, right? So let's say I just do that. Let's say I go for 45 pips here to the upside. If price breaks to the upside by 45 pips past where I'm interested in entering, then we'll be out of the trade for attempt number 1. So euro dollar, right, comes up to that level. Let's say we get it. And what I will often do, if you're familiar, if I could speak, with my trading styles, I'll try more than once to take an entry. So for example, we've got this trade, but what about if we also want to try it here, right? So I am fully aware that the market has a lot of noise built in. There's, it's not as predictable as sometimes you'll hear online. The truth is the market is quite difficult to try and time. So as a trader, what I'll often do is I'll take more than one attempt if I need to, knowing that I can just risk very small in this trade, and maybe if I catch the winner on one of them, it's all worth it, right? There are times where I take this first trade, it works out beautiful, and the market drops perfectly, right? But then there's other times where that one just doesn't work out, but the second one works out, right? And then every once in a while, I'll take just the double loss, just market just beats me up, and that happens too. But the idea is, most of the time I'm able to actually catch some decent moves off of these rallies and sell intos, right? So if I'm looking at the 4-hour chart, like I said, I like this thing to the downside based on the higher time frame trend. I also like this thing because on the Edge Finder we have a very strong sell rating for the Euro USD. Take a look at the strong sell, -7, and almost every category printing a red color showing bearishness for the euro dollar. You might be unsure of what you're looking at if you're newer to my channel. This is the A1 Edge Finder. It's our market scanning tool. I own a company where we build tools and software for traders, and this is our flagship tool, if you will, the Edge Finder. It basically consolidates a lot of different metrics and indicators into a single place where we can punch out a bias on a particular asset based on those metrics. So if we're looking, for example, I know that was a lot. Let's take a look at COT data and go one piece at a time for a second. If we're looking at the dollar against the euro, well, the dollar has 77.7% long on their futures contracts holdings according to the CFTC's Commitment of Traders report, which we get each Friday. Okay, so this data is telling us that as of the latest, the dollar seems to be still very, very strong according to the institutional traders who are buying it. Okay, and then on the flip side, you can see that the euro is pretty dang mixed. You've got 56.44 in terms of their contracts open. So not a huge bias there. So this doesn't really help us too much, but this tells us the dollar's looking bullish. So when comparing the euro against the dollar, we want to not as much favor the euro and favor the dollar more likely. Right? I hope that makes sense, but that's one indicator. You can read up and learn more about this as much as you'd like. If you don't already have the Edge Finder, I'll link the place where you can get it down below in the description. And if you punched in that promo code, you'll get access to it for a cheaper price. But we use this for pretty much every single trade that I take, as well as Frank inside of our VIP service. Any trade that we take, we offer it, or we break it down with the Edge Finder as well. So I do like euro dollar short. We also have seasonality in mind as well, right? You've got the month of October and November, which are negative expectations based on historical data in the last decade or so. These months tend to be slightly negative for the euro dollar, which of course is an interesting little stat to keep in mind. Now, I'd want to show you guys also the smart money tracker here today, just to see what's going on in the latest. Of course, this is basically just a breakdown of positioning. So what we can see is that the yen is very, very weak. You've also got some of the stock markets very, very weak as well. You've got the pound very weak. What this is telling us is that of the contracts open, only 31.5% are long on GBP. So that's telling us there's a heavy short bias on the pound going into this week. Same with the dollar, 77.71% long, very, very strong holding to the upside there. US oil also very high as well. You've got the euro, which is about 56, so that's kind of middle ground. CAD slightly more negative, right? Aussie negative. So very interesting stuff to kind of just track what big players are tending towards in their positioning. So there you go. I would like, of course, to keep going and take a look at some more pairs. Let's look at the pound dollar now that we've spoken about it here for a second, and we'll drop down to a little bit lower time frame. So higher time frame, actually, real quick, higher time frame, right? We've been very, very bearish. And until this changes, to me, this is something that I'm not willing to buy, right? I'm looking to be more on the sell side, going with the flow, following trend, just because, again, a lot of times people try and outsmart the trend, they try and get bigger than that, and it can be a very painful game to play. So when we narrow in on the pound USD, again, we had a little bit of a bump to the upside, but it seems that towards the end of last week, we sort of fell apart on that upward trend and now have started to see flow to the downside. So if we zoom in here, we're looking at an hourly chart. This is much lower time frame. You might get opportunities, in my view, to possibly see some sells on the retest. Now, of course, this is my opinion, as all of this is, but I like the idea personally of just kind of following the pound down and trying to put stops on it and trail. So what I mean by that is, like, let's say, for example, that we caught a swing back up this week, right? So we come back up into this area where we found a lot of sellers. Let's say I'm able to put my stop just above this little pivot high where we had some sellers come in very hefty right there. You can see on the hourly chart. So let's say I put my stop just above there. That's about a 95 pip stop. And let's say, for example, that the pound comes up to our level, comes pretty close into this area, and just tanks overall. If that were to be the case, if we were to see trend continuation this week on the pound USD, what I would be looking to do is I'd be looking to take this stop loss. And once the market moves in my favor like this, I'm looking to take that stop loss and start trailing it behind market structure. So let me paint a picture for you. Let's say we enter the trade, right? Trade comes up, we enter the trade. We get some reaction and we start moving down. And let's say we actually get what we consider right here a lower high. What I would do is I'd take this stop loss, right? And I would trail it down above market structure, right? And then we repeat the process until basically I'm stopped out. Right? So let's say we get another one right here, right? So I'm looking for like new lows, new lows, new lows, and new lower highs, and I'm just basically trailing market structure. If you watch my live trading videos, you'll know that I do this pretty much all the time. And anytime I make updates to this, I share it inside of our Discord channel. If you're not already in the Discord, here's what it looks like. I share all of my trades. So you can see, for example, as we speak, I mentioned earlier that I'm trailing stops on a winning trade on dollar Swiss. I entered it a couple days back. I'm currently trailing my stop loss and letting people know about it. So every trade that I share, again, or every trade that I take, I send out an alert directly to our VIP members inside of our Discord channel. Again, that will also be linked down below in the description. So if you want access to that, just use that link down below and you can get access before the week starts. So I invite you to join us. It's a lot of fun in there. We have a lot of great members and people involved in making it possible. Let's keep going. Let's take a look at gold here today, see what's going on with XAUUSD. So gold really struggled to hold its gains towards the end of last week. Now we had a really impressive run up on gold, but we just have to, acknowledge the fact that, yes, we had a strong run up, but within the broader context of gold right now, we've seen this thing trending down. And until that changes, that's the narrative, right? So you'll hear me myself start sounding like a broken record. But the truth is, trading is kind of meant to be boring. It's kind of meant to be repetitive, I think. The longer I do this stuff, the more I just sort of, it's kind of, I enjoy it still. I love learning about markets, but the actual execution is just kind of a job. It is just, I show up, I do what I'm supposed to do. I analyze the charts, place my trades, risk small, so on and so forth. So when I look at gold, again, the downtrend on the daily still looks very healthy. We rejected the 50-day moving average and overall have been falling from there. So if I'm looking at this thing from a little bit lower time frame perspective, there might be something like this in mind. So maybe you missed the double top right there up at the top, but maybe there's something like this, right? Some breaks, retests, right? So this is how I will be, if I'm going to place trades on gold, if I was to short gold, that's how I would approach it. Right, looking for breaks and retests out of this area. So we had this level of consolidation kind of come into play, and we broke underneath it towards the end of last week. So if you get something like this move here, I don't mind looking at gold with a slightly more bearish perspective. I'd be curious to see if the Edge Finder has any strong bias here. So let's go to gold and see if there's anything there. Yep, gold is under a sell category here. And by the way, you can always pause the video if you'd like to when I pull up these charts, and you can read along with why the Edge Finder fully thinks one thing or the other, but just a little interesting stuff there. Gold overall, like I said, sell bias. Still has a little bit of momentum to the upside though, so you may get some pokes higher, but overall it's sort of calling for that sell off, which it's actually been bearish on gold for like a couple of months now. So it's been really cool to watch the Edge Finder sort of picking apart all these different charts and then watch them play out. So AUDUSD, here's another one, very weak into the close, which makes sense, right? The S&P 500, the Dow, they had a really tough close to end the week last week. And with that, a lot of the risk-on currencies like NZD, GBP, and Aussie, the Aussie Dollar AUD, of course, those are going to get smoked in a risk-off move. When people are fearful of markets, they sell the Aussie very quickly. The Australian dollar has a lot of exposure to trade. It's a much smaller, economy. So the fear of looming global recession takes people's money out of places like this and starts putting it more into the dollar and other safe haven assets, if you will. So looking at Aussie dollar, if you're looking at this, it's again, same story with a lot of these pairs. They're in a downtrend, the dollar looks strong, and until that cracks, we'll continue to do this. If you can go back into my videos for the last year, every Sunday, you'd pretty much probably hear me say the same thing. Looking for bearish setups on Aussie dollar, looking for bearish setups on gold and on the euro. And until something changes, right, with the dollar, that remains the plan. So 4-hour chart, if we're looking at this, we've got consolidation currently. So if we get a break underneath the lows, right, or above the highs, this could be interesting. So we've got kind of the break below, similar thing to what gold was doing there, right? We got a break of consolidation to low. If you get some moves like this week, if you are bearish on the Aussie dollar, this could be a continuation play. And if we do get a swing back the upside, maybe up here in the 65.30s, right? Could be an interesting area of resistance off of the 4-hour chart for possibly some swing trades. Now, again, we'll take a look at the AUDUSD, follow up with this one, see what's going on here. -5 gets a bearish reading overall. This one has momentum to the downside. This one looks very, very quite weak. And actually also another thing I haven't been talking about as well, retail sentiment is finding a lot of buyers here, right? So retail traders are very heavily long on assets like gold and on the Australian dollar, right? As this thing continues to just fall, it's kind of crazy to watch as retail traders do that. In fact, let's go look at retail sentiment. I'll show you guys this tool. So what this does, it shows you all the different assets that the Edge Finder tracks and the retail sentiment associated with them. So if we're looking, for example, at USDJPY, we'll just pick a random one. 31% of the crowd is long. We're a whopping 69%, nice, is short, right? So you have all these different, tracking the crowd. And if we know what the crowd is doing, it can be useful information because the retail trading crowd tends to sort of just be on the wrong side of great moves. So for example, we know Australian dollar is trending down. We were just looking at it. 75% of retail traders are long on the asset, which is concerning because it's like, okay, wow. So basically retail traders are just holding on to a massive loss on the long side, and this thing continues to truck lower. So, using this information and saying like, okay, well, they're trapped. They're currently a bunch of short traders, or there's a bunch of traders who are long, could actually be a great opportunity to look to get short, that sort of thing. So it's a powerful indicator I use pretty often just to include in my analysis. If something is super piled in long from retail traders, I may look to get short, etc. And again, all this is available on the Edge Finder. If you're not already using the Edge Finder, again, I think it's pretty game changing. It brings a lot of stats and figures to retail traders to help you be a little bit one step ahead, right? You get all this different information. You get forecasts, market heat map, fundamental analysis like seasonality, economic news, and so much more. If you're not already using it, like I said, the link will be down below in the description. And if you use the link and promo code down below in the description, you'll actually get access to it for a cheaper rate. So check it out down below. Thank you guys very much for watching, and we will see you back this week.